Thank you, market jobbers. Tell your friends, subscribe, like us, all that other stuff. But I'm sure you will anyway if you just listen to what we talk about here. Because here we talk about the real deal stuff, you know? If you want to talk about Fibonacci and friggin' Elliott Wave and Gann, whatever, this is not the place for you. I was in the institutional trading world for more than 20 years, and I can tell you, no one in the institutional world looks at this stuff. Okay. But if we look at the classic technical analysis patterns, they make sense if we understand what to look at and what they illustrate. So we could have what we call the old floating island pattern in SPY. You don't see this too much, but I wrote about this in my newsletter, but I didn't really vocalize it. But anyway, you can see that the last 3 days, well, this thing is jacked up and it's gone sideways. So say this was the ocean and now it's floating, and it's the old floating island, right? It's like Bob Ross of charts. That's me. Oh God, I would be really happy to be the Bob Ross of charts. But let's just take a look at this dynamic here. Notice how what was resistance here turns into support here. People say you always talk about the same stuff. Well, what the hell? If you were a mechanic, like, can you even believe someone sent me an email that said, you should show us a trick every day? I don't want people like that in my class. If you're looking for a trick of the day, if you're looking for like a daily trade recommendation, I'm sure you can find that somewhere else out there, but this is not for you. I want people, I did this for a long time. I know a lot about it and I can teach people, and I'm looking for people that want to learn. I don't care if you're an institutional trader for 20 years and your boss has been getting on your case, or you're someone who's just new in the game, or you're a high school student, or you're a college student, or you're someone who lost a lot of money on GameStop. The only thing I care about is that you want to learn. All right. So when we look at the old floating island pattern, this is not hocus pocus like Gann theory is. There's a reason why this could potentially be a reversal pattern, meaning that this price action indicates it's about to go lower. So resistance here became support here. Happens all the time in markets. It's because of seller's remorse. People sell. They think it was easy when the price goes lower, finally gets higher, and they're like, I made a mistake. If it gets back to my price and I can buy my shares back at the same price I sold them, I'm going to. So resistance converts into support because of remorseful sellers placing buy orders. The same thing happened here. Resistance converts into support because of remorseful sellers placing buy orders. Now, this is where the essence of this pattern lies. We had like a gap up. We closed here and we opened here the next day. There was no trading in these price levels. So, if there were no trading in those price levels, there was no one who sold. So, if there's no one who sold, there's not going to be remorseful sellers trying to buy shares back if we reverse and get back into these levels as the old gaps refilled in. There are going to be buyers, but there just won't be as many as usual. So it could set the stage for a rapid move lower. All right. Some of these, there's a lot of technical analysis patterns I don't use. I just like a wedge. I don't understand a wedge. To me, a wedge is a sandwich. You know what I mean? I mean, I'm in Connecticut. We call them wedges. You go to Philly, they call them hoagies. You go upstate, they call them subs. But it's all the same thing. I don't know about a wedge. Elliott wave, gathering. When I look at a chart, I think, what does this tell me about supply and demand? What does this tell me about psychology? If you can tell me what Elliott wave or Gann theory does about this stuff, I would be more than welcome to listen. But I've done pretty well over the last 2 decades just by not overthinking things. Supply or levels, trends, momentum. And we're starting our Mark Petrino trading school soon. But levels, trends, and momentum. So let's just think about this. Levels. We just talked about the importance of going through price levels with no trading, which means there's a good chance that we go right back through those same price levels with a low amount of trading and we get a quick reversal. We talked about levels here, right? How a level that was resistance can become support, resistance can become support. when I teach people, it's this: levels, trends, momentum, psychology, and then let's just throw another one on the end here: common sense. That's going to be my new thing, because it is just common sense. If you go into any market, if there's more buyers than there are sellers, the price is going to go up. I don't care if it's a stock. I don't care if it's a shoe, whatever. If there's more sellers and buyers, the price is going to go down. It's just basic economic theory. And supply and demand. All right, everybody. I hope this helps. Please make sure you recommend us and subscribe and come back to our live stream tomorrow at 8 in the morning. And I hope to see you then.